Hi there, welcome to Kneppy Invest. Time for a technical update, and in today's video, I'm going to be featuring 5 ASX companies, including Megaport. I'm also might be looking at a 6th company because I was going to feature this company in this video, but I decided to exclude them from this video. But then this company released an announcement today, BWX. They're doing a capital raising. They also released financial year 22 and financial year 23 guidance. If they can hit financial 23 guidance, this company is severely or significantly undervalued right now, and the share prices, or the share price of this company is at historic lows right now. And more than likely, because of this capital raising today, the share price will take a hit. So I've decided I'll probably have a brief look at that company today. I'm also going to look at the international markets, the XGO. Well, that's not an international market, Australian markets, the XGO, and also the Nasdaq briefly, because we have seen the markets bounce over the past week. And I have heard a lot of chatter that potentially this is the bottom and this is the start of a new uptrend. I think that is a little bit premature, simply because there is still a lot of negative sentiment in the markets, a lot of negative sentiment when it comes to the economies, and more than likely this is just a relief rally in a bear market. And you do get a lot of relief rallies in bear markets. Just because the Australian market went up 2% on the 27th of June, the Monday, doesn't mean that is a sign that everything's turning around, because the best days on the ASX, the best days on equity markets are usually in bear markets. When you're in a bull market, you won't see the XGO rise 2%. That happens quite rarely, because usually in a bear market, in a bull market, the market goes up gradually, slowly, but there's a lot of volatility in a bear market. And we're seeing that volatility now. We're seeing some big up days and some very big down days. But overall, right now, there's still pessimism in the market, still negative sentiment. And I think the best time to buy, and this is just my opinion, the best time to buy is when there is peak pessimism, when the economy is in a full-blown recession and everyone's saying the equity markets are too risky, it's just like gambling. And we really haven't seen that yet. There's still some people out there who think the economies are strong. I heard this from David Koch last week. He said the economies are strong. Look at the unemployment rate. It's only 3.9%, but they're looking at the wrong thing. Don't look at unemployment rates. Look at inflation. And the individual person on the street doesn't look at the unemployment rate and says, well, everything's great. They look at what they're paying at the supermarket, what they're paying with fuel, and notice they're not getting a pay rise. So they realize their real wages are going down. So they're going to spend less. And because they're spending less, we will see economies around the world suffer. This is going to happen. And more than likely, a lot of economies in the world will move into recession because of inflation. And we are starting to see a lot of companies lay off staff. A lot of tech companies in the United States are laying off a lot of staff, including Tesla. So this is the first signs that we are heading towards some troubled times. And I think it all comes back to inflation. If inflation remains heightened for an extended period of time, there is a possibility we will move into a period of stagflation, which is the worst case scenario for everyone. So I am rambling on a little bit. So let's get stuck into the video. So what are the 5 companies I'll be featuring in today's video other than BWX? So I'll be looking at Megaport. And one of the reasons I wanted to look at Megaport is just the market reaction over the past 2 days. We have seen a really good rally in that company, and the share price has pulled back over the past about 5 to 7 months quite significantly. Novonix, we've also seen that company rally quite a bit. Mesoblast, and there's one simple reason I want to look at that company. St. Barbara, we've seen that share price really pull back significantly over the past year or so. And a company I've never looked at before, GWA Group Limited. Just want to look at the XGO fairly briefly here, probably look at the Nasdaq in the next slide, but the XGO has bounced, and we should have expected a fairly good bounce after 2 weeks. I think it was about 2 weeks of down days. In fact, there was about 7 or 8 consecutive down days from about 7,200 all the way to a low of 6,400. The market was oversold. And whenever you see the market oversold, there's going to be some people here who have recency bias, who see some value in the markets. And that's why we have seen the market bounce. And it has been led by overseas market, particularly the American markets, because the American markets were oversold as well. So to see the Australian markets bounce over the past few days should be expected, and I have lightened my load. I have sold some shares in my portfolio, and this is the time to start selling. If we see the XGO move towards, say, 7,000, that could be a good time to sell out, moving towards the moving averages. I think another sort of resistance level would be between about 6,760 and about 6,840, which was the lows we saw at the end of January. So really intriguing to see how the market trades over the next week, because we have seen a little bit of a change in sentiment, very short-term sentiment change in the past few days. A few people out there think we have reached the bottom. I think that is a little bit premature at this point in time. I want some confirmation, because when you look at the chart, particularly from the start of the calendar year, it does look really bearish at this point in time. And this is potentially the start of a bear market for the ASX 200. And as we turn our attention to the Nasdaq, this is the US 100, so the NDQ, and this is a well-defined downtrend. So nothing's changed with the Nasdaq, the NDQ. This is just a little bit of a bounce within the larger term trend right now. And we have seen quite a few bounces over the past 6 months since the start of the calendar year. In fact, we've seen 1, 2, 3. This is the 4th bounce within 6 to 7 months. And this is a significant feature in any bear markets. If you go back to 2008, if you go back to 2000, these relief rallies are a significant feature in those bear markets. And this does catch out a lot of investors. When they do see the market rally, they think that's the time to buy. And a lot of times this is when institutions are selling into these relief rallies. In fact, I did hear someone mention, and this is, I forget exactly where, that over the past 6 months, we have seen retailers buying and institutions selling. And once that switches around, when institutions are buying and retail investors are selling, that's the time when we might see the bottom reach. But at this point in time, retailers are buying, retail investors are buying, but institutions are still selling, and institutions are selling in these relief rallies, but retailers are buying in these relief rallies because they've been taught by the dip over the past 10 years. First company we'll look at is Megaport, and we're going back in time from when the company listed all the way through to about the middle of 2019, and the share price when it listed was around about $2. And then during 2017, sort of the end of 2017, in the start of 2018, we did see the share price of Megaport rally from about $1.90 all the way to $4.50. And then the share price went sideways during most of 2018 into the start of 2019, and it was really struggling to get above $4.50. So $4.50, which is this horizontal dashed line right there was a resistance level because the share price of Megaport was struggling to get above that. And then we needed to see the share price get above $4.50 on strength. And we saw that on the week or during the week of 8th of April, 2019, share price went above $4.50 on strength. And then we saw further strength the next week. On the 15th of April, share price actually increased that week by 13%. And that was a breakout in the share price. So if you were trading Megaport, that would have been a dead giveaway signal to take a position in this company at around about $4.60 or $5 with that breakout. And then the share price rallied over the next, the rest of 2019 into the start of 2020. Share price went from that $4.50 breakout to a high of about $17.50 all the way through to the end of 2020. There was a bit of a blip during the COVID-19 financial panic, but the uptrend was not broken during that blip, even though the share price went from $12 all the way to a low of about $6. And I've put another horizontal dashed line at the COVID-19 lows. The reason I put those two lines in, that $4.50 breakout in April 2019 and the COVID-19 lows, will become evident as we move later in time, particularly where the share price is right now. Share price continued to rally all the way to a high of $22, which was reached in late 2021. The share price of Megaport has been under pressure ever since then. You can see a significant sell-off in Megaport from $22 all the way down to less than $5 for a period. So why have I put these two horizontal lines in. So remember, the first horizontal line, the lowest horizontal line, and if I just zoom in here a little bit further, was that breakout we saw in the share price in April 2019. And the share price of Megaport almost got to that level and then has bounced off that level. And that other horizontal line, which is the COVID-19 lows, we saw share price go below that. And the share price right now is right on that. We call that resistance level right now. So I'd like to see the share price get above that resistance level. The good thing about Megaport over the past 2 trading days is really good volume has come in when the share price reached or went below $5. So heightened volume, which tells me the market is interested in Megaport at these prices. The market is getting interested. They see value, which doesn't surprise me because this is a favored company among a lot of fund managers, and those are the sort of the people you want interested in a company because they can drive the share price of a company higher when they see good value. So really interesting trading of Megaport over the past 2 trading days. So a lot of strength. So this could be the possible low in Megaport. I won't confirm that just yet, just a possible low. But the downtrend is well intact. You just see here with the daily chart, there's no sign the downtrend has come to a completion, but there are promising signs right now with Megaport. I've been following, the next company I want to look at is Novonix, and I've been following this company ever since about September 2020. In fact, it was Tesla Day, the 23rd of September 2020, where we saw massive volatility in the shares or the trading of the shares of that company on that one day. In fact, on Tesla Day, that day, the shares opened at about $2.40 and then closed at $1.40. So massive amount of volatility on massive volume. And that volume continued the next few days. In fact, that's a very bearish candlestick. So it's no surprise to see the share price fall from there. In fact, it fell from about $1.40 all the way to $1. But $1 was a really strong support level. First of all, it's a round number, fairly significant round number, $1. And because Novonix share price failed to fall below $1, that's actually a fairly bearish sign. And then as we moved into 2020, we saw significant strength come into the share price of this company. A lot of FOMO, a lot of hype, and that hype pushed the share price from $1 to about $4 in about 1 month of trading. So a fallbagger in a very brief period of time. And then whenever you see a share price rise exponentially, there's always going to be a pullback in the share price. We saw that over the next few months, and then we saw a really interesting rise in the share price for Novonix from about July all the way through to the end of 2021. Share price rose from about $2.50 all the way to a high of $12.50. But again, whenever you see that exponential rise in the share price, there is going to be eventually some selling. And that selling came in on the 3rd of December 2021 when the share price fell 32%. That was the time to get out of Novonix. Not maybe then, but the next few weeks, because whenever you see a share price drop like that, there will always be some people who come in and say, well, there's good value here right now because the share price has dropped 32% in one day. And this is all to do with recency bias. They think, well, the share price was $12 a few days ago. Now it's $8. It's good value. And those people come in, those investors come in, buy, and that's why the share price will rally. And we saw that over about a month, maybe even a 2-month period. Share price rose about from $8 all the way back to above $10.50. So during that period was the time to take profits, because from then the share price has fallen significantly and it keeps falling right now. Now there's 2 pretty strong levels of support for this company. The first level of support was around about $4, which was a high we saw in January 2021. It struggled to get above that level in August 2021. It took about 2 weeks to get above that level. You can just see that period here. Here, it was about a 2-week period where it struggled to get above that level because that $4 level was a resistance level. And as soon as it went above it, that level became resistance. It didn't struggle to get below that level at all. Actually, sort of did struggle. So it went below $4 and it wanted to get above $4, but it didn't. So we saw some selling. And as soon as it started to move below around about $3.50, the share price of Novonix went back down to the next level of support, which was right on $2. And that level of support goes all the way back to that Tesla Day back in 2020, September 2020. And it has rebounded. Novonix share price has rebounded off that $2 support level, but it remains to be seen where that support level will hold over the next few weeks. If we continue to see pressure in the overall economies and the markets, $2 could be broken for Novonix. We haven't seen massive volume come in over the last few days, unlike we've seen with Megaport. So I wouldn't say the last 2 days rallies hasn't been on strength. In fact, yesterday, when the overall market climbed about 2%, actually, Novonix actually did climb 2%, but there wasn't a lot of buying coming on that day. In fact, there was less volume on that day than the previous week. So not as bullish as I am with Novonix as I am in relation to Megaport. And I do think there is potential we will see $2 broken over the next few weeks. Next company, Mesoblast, and there's one simple reason why I wanted to include this company in this video today. In fact, the reason I wanted to include this video happened about 5 weeks ago. So $1, again, round numbers tend to be very powerful numbers in terms of resistance and support. So I've already mentioned that with either Novonix or Megaport. But if we go to Mesoblast, $1 has been a really strong support level for this company ever since 2016. We have seen share price of Mesoblast reach $1 on 3 occasions, and then the share price rallies. So whenever the share price gets to $1, that was the time to buy Mesoblast. And then recently, sort of around about March of this year, share price reached $1. In fact, I'll go to the daily chart just to really emphasize this. Share price reached $1 on the 7th and 8th of March, and we saw a rally in the share price. In fact, on the 9th of March, the share price of Mesoblast rallied 17%. So that does not mean that $1 was the low for the share price. That just means there were a lot of traders out there who saw the share price reach $1 and thought, well, because $1 is a strong support level, now is the time to buy. But that strength in that rally was very short-lived. Share price did go to about $1.28, almost $1.30 over the next week or so, but there wasn't any strength. We didn't see really high volume. Because it wasn't really strong, no high volume, that does spell trouble for Mesoblast, and there was still a lot of negative sentiment in this company. So there would have been quite a few investors who saw that rally and found that time to get out and sell. And that was the right time to sell if you were hang on to these company shares. And then we saw the share price move back towards $1 over the next month or so. It actually hit $1 on the 6th, 7th of May or 9th of May, and it really struggled to get below $1 over the next 3 weeks. And you just see the share price just hovering around $1 over the next 3 weeks. And then all of a sudden, on the 1st of June, the share price fell 2.54% and closed at 96 cents. And then the next day, it fell 5% and closed at 91 cents. That was troubling for Mesoblast because that meant that there was a little bit more selling coming in because $1 was not really a strong support level anymore. Those who wanted to buy in $1, because $1 was a very strong support level, they thought the share price would bounce. They didn't see that bounce, and those traders were starting to sell. And as soon as the share price started to fall on those 2 days, on the 1st of June and the 2nd of June, those traders were now selling because this trade they thought was going to happen was not happening. And that's why the share price absolutely took a dive over the following 2 weeks. In fact, the share price fell from $1 all the way to a low of 65.5 cents on the 15th of June. Share price has gone sideways since then. So we haven't seen a rally in the share price. Haven't seen a bounce in the share price, and that is troubling news. Share price just going sideways. So definitely more potential downside for Mesoblast. Market cap of this company is still $451 million. This company is burning through a lot of cash. They're not generating any revenue at this point in time. So the market is really skeptical about Mesoblast right now. So this is one of the most bearish charts you will see on the ASX right now. Next company I want to look at is St. Barbara, and the journey of St. Barbara over the past 7 years has been really interesting, sort of like a roller coaster ride for shareholders if they've held on over that 7-year period. In fact, the share price of St. Barbara went to a low of 8 cents. I think there would have been some questions about the viability of this company back then, but I have no idea. But whenever you see a share price go to that level, 8 cents, so the market cap of this company would have been fairly low. I think there definitely would have been some viability questions about the company moving forward. But then those viability questions were answered, and that's why we saw a rally in the share price from 8 cents to a high of $3.75. So that low was reached in December 2014, and then the next high was reached in July 2016. So about 18 months, the share price rose from 8 cents to $3.75. So that's the sort of journey you want to be on. That's the sort of company you want to be owning shares in at that point in time. But I don't think this is a forever hold sort of company. You can just see when we look at the chart of St. Barbara over the past 7 years. So this is the weekly chart. So share price rallied from 8 cents to a high of $3.75, fell to about $1.75 in 2016, and then rallied to $5.25, which was reached in 2018 and then in 2019. But the share price has been falling consistently since then. The first resistance level or support level the share price did fall through was $1.75, and it fell through that support level in July 2021. The reason that's a support level, you can see the two recent lows we saw in 2016 and then again in 2020 during the COVID-19 financial panic. That was a fairly obvious support level, fell through that on fairly good strength, and the share price keeps on falling. There must have been some pretty bad news for St. Barbara last week. Share price fell 29% in 1 week and is right now at around 86 cents. So that next low we saw back in 2014, which was 8 cents, is a long way from here. But this is another chart, another company that is looking really bearish, no end in sight to St. Barbara. Now, in saying all that, the current market cap of St. Barbara is around $700 million. Now, I have not done any research in this company, but if we look at the financial state of this company over the last 5 years, they've produced about $600 to about $700 million of revenue. And if we exclude looking at profit last year, which was net loss making of 176, this company has been profitable: 128 million, 144 million, 227 million, 158 million. If we look at the cash flow of the company, where's the cash flow? Oh, there it is, the cash flow. So I'm looking at operating cash flow. Operating cash flow, 227, 279, 240, 315, 303. Lots of investing. So investing negative 200, negative 300. So this company does spending a lot of money on investing activities, it seems like, over the past 2 years. So that's something you probably have to look at. But if the company can sort of turn around whatever's happening with this company, maybe now is heading towards good value. But just the negative sentiment in this company right now means I'm just going to stay well clear of this company until I see a shift in sentiment, because the share price just keeps on dropping. The next company I want to look at is GWA Group. They have something to do with kitchens, that sort of thing. I haven't really looked at this company too in depth. And one of the reasons I haven't really looked at this company is because when you look at the chart, and this is the monthly chart, there's no reason to be holding this company for the long term. This is a trading company. So I might be more interested in this company now because I am shifting to become more trading than long-term buy and hold. And this company has popped up onto my list because the share price has reached a really interesting level over the past few trading days. So if you go back to 2010, when they must have listed on the ASX, the company's share price has traded in between $1.75, which seems to be the low point, and between about $3.75 and $4. So whenever the share price of this company gets above $3.75, that's the time to sell. Where the share price gets to about $1.75, that's the time to buy. So the only reason I've looked at this company recently is because of where the share price has reached over the past few trading days. So this is now looking at the daily chart. And over the past few trading days, the share price has rebounded off $1.75. So technicals do work. And the reason technicals do work is because you will have some traders who will know that when GWA share price gets to $1.75, that's the time to buy because of what's happened in the past. And we have seen that with this company over the past few trading days. Share price has rebounded off $1.75, is now at $1.92. So that's the only reason I'm interested in this company. Market cap of this company is $478 million. And if you do look at some of the financials of this company, so last year, $405 million of revenue, $36 million of income or profit. Previous year, $400 million of revenue, $44 million of income. So this company is growing very slowly in terms of revenue over the past 5 years, and profit has sort of gone sideways. So again, this is not a growth company. And the only reason you might buy this company is if it is at the bottom of its trading range, and it is at the bottom of its trading range right now. And that's the only reason I might be interested in taking a position in this company. Now, I mentioned that I might include BWX into this video. I was thinking about featuring BWX in the video, but I decided to exclude it in favor of GWA. It became clear why I wanted to include BWX when we look at the chart. But the reason I've decided to include the company today is simply because they've released an announcement, a capital raising announcement, and also a trading update. The market has not liked what's happened with this company today. Share price is down 37.6%, more than likely because the capital raising is done at a significant discount. And to be honest with you, this is the worst time sort of capital. I hate these sort of capital raisings because the share price is at historical lows. You don't want to do capital raisings when a share price is at historical lows. You want to do a capital raising when the share price is at historical high. So this is bad news for investors. And so let's have a look at the capital raising. I haven't looked at this in the past. So capital raising, $23.2 million capital raising, $13.3 million placement to sophisticated professional investors, and a $9.7 million 1-for-10 traditional non-renounceable entitlement offer. And they should have a price in here somewhere. I haven't seen a price anywhere. So they should have a price somewhere. Details of the offer. A discount of 48.7% discount to the last closing price of $1.17. So no wonder the share price has taken a dive. Share price or the capital raising is at a 60 cents. So the share price hasn't reached that, only 73. Wouldn't be surprised to see the share price drift towards 60 cents over the next few days. Absolutely hate this capital raising. Absolutely terrible capital raising. And this really dents any sort of thoughts I do have on this management. So I'm not sure why they're doing it, but this is the worst time capital raising. And that will become apparent when we look at the chart. So no wonder the share price has taken a dive. But there could be some positives moving forward. This capital raising could be leading to a more healthy balance sheet. So maybe they're doing this capital raising to decrease their debt. So that could be good news for those who are not shareholders. So this is not good news for current shareholders. And the other thing that is interesting is they did give some guidance. And this guidance is really interesting. So not only for financial year 22, but also for financial year 23. So for financial year 22, they're forecasting revenue to be 206 million, EBITDA to be between 6 and 10 million, which is significantly lower than last year. But financial year 23 forecast, revenue to climb to be between 260 and 270 million, and EBITDA to be between 45 and 49 million. So there could be some possible value for this company right now at current levels. So I think the market cap of BWX could be more like towards $100 million right now. I'm not sure exactly. Don't follow this company too closely. But if so, with an EBITDA of 45 to 49 million, this company would be looking interesting. So TradingView says the market cap of this company is 188. With this capital raising and the drop in share price, maybe it might be a little bit lower than that. But you can just see the share price of this company has been under significant problems over the past. Well, actually, we'll go to the weekly chart. And the reason why I became interested in this company is because this company's share price has been all over the place since it listed on the ASX in 2015. So it's gone to a high of about $8.25. And during the time from when it listed to that high, which was late 2017, this company was fairly well received by the market. And then we saw the share price dive from $1 or $8.25 all the way to a low of about, what low was that? That was about $1.35 in 2019, January 2019. So there would have been some really bad news during that period. So we have a couple of weeks where the share price absolutely took a dive. There was 1 week where it dropped 25%. Another week in December 2018, where the share price dropped 50% in 1 week. So more than likely, there was some bad news with that. But the share price did rally off about $1.35. Actually, I'll just zoom in there. You can see the share price rally off $1.35, went to about $2.50, and then went back and tested $1.35 in the week of 13th of May 2019. And then we saw a nice little rally in the share price. But the share price of BWX has been dropping ever since August 2021. More than likely, they released some negative results in August 2021, and that's why the share price has been dropping. We've seen some really big down weeks. One week where it dropped 23%. That was January 2022. Another week where it dropped 27.3%. Another week where it's dropped 28%. So more than likely, the company has been releasing some bad news, maybe some profit downgrades during that period. But that support level at $1.35 was broken 3 weeks ago. No reason to be holding this company because that support level has been broken. Lots of negative sentiment in this company. If we look at the daily chart, share price just keeps on dropping, and this is another massive drop in the share price. But again, if this company can succeed in their or reaching their financial year 23 guidance, I think there could be some good value at these prices. But the negative sentiment, this capital raising could see the share price drop even further from 73 cents. That's all I have for this technical update on Megaport and 5 other companies, including BWX, which have released some negative news to the market today. Capital raising, which at a massive discount, and that's why the share price is down 37%. So I really feel for shareholders of that company, but it could be leading to some opportunities for other investors, non-holder shareholders to buy into that company. However, a really bad time to capital raising. Don't like the timing. Don't like a capital raising done when the share price is at historical lows. So I would rather the management of this company do this capital raising when the share price was at historical highs. But unfortunately, share price has been dropping for a long time over the past, was it since August last year? So share price has been dropping for 10 months straight. So more than likely, they had to do this capital raising to shore up the balance sheet. And maybe this is a well-timed capital raising if the market really tanks it over the next few months. So that remains to be seen. If you do have any thoughts, different thoughts than I do have on any of these companies, I'd love to hear from you. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.